So hey everyone, I'm Ryan Honeyman. I'm a partner at Lift Economy. It's a 6-person consulting team. I'm actually based in San Rafael in the North Bay of the San Francisco Bay Area. The reason I'm here is because I wrote a book called the B Corp Handbook, and I've helped about 45 companies so far go through the B Corp certification process. And so that sort of quick overview today is just, what B Corps are, why they matter, and how any of you can take this tool to any of your companies. So I think it's important to do a quick background. So B Corp certification was originally designed for-profit companies who wanted to use their business as a force for good. And so one of the main ideas was that there's been a lot of certifications over the years, like organic or fair trade. But what B Corp wanted to do was to look at holistically at a whole company's impact. So as you can see on this first slide here, B Corp looks at governance, workers, community, environment, and customers. And so what that does is it gives you not just, is my building energy efficient, or, do I have, carbon offsets for my company? But, it talks about community. Do you have community service? Do you have local purchasing policies? For workers, do you have, in addition to maybe healthcare and some other benefits, do they make a living wage? For governance, it could be questions about, do you have do you have a board of directors? Do you have an independent member on the board of directors? How many women and people of color are on your board of directors? So it's really comprehensive, and I've found it to be very powerful for companies, which we'll get into some of them, because it can open up ideas that you may not have considered in relation to what does it actually mean to be a socially and environmentally responsible business. So talk about a few of the things here. So the first thing I got really excited about was this idea of a holistic framework. So this is actually Keba and Tijan, who work for Red Bay Coffee. They're a coffee company. They've been thinking about how do we improve our social and environmental impact, and the holistic framework of how to apply social and environmental values to their whole company was very valuable for them. So that's one reason B Corp is really popular with folks. The other is the community. So, Danone North America, Patagonia, Ben & Jerry's, Kickstarter, Allbirds, Dr. Bronner's. There's a bunch of companies. I did hear a few British accents earlier. So Unilever is not yet a B Corp, but is deeply in the process of becoming one. And I just spoke to someone from Adidas the other week. They're interested in looking into this. So this is not just sort of only small to medium. There's also larger companies in the mix. So that's one of the sort of later iterations of the movement. There's about 3,200 B Corps in 70 countries. So, it started in the US, but I think it's really amazing that in Afghanistan, there's a B Corp, in Mongolia, Australia, New Zealand, South Africa, Mozambique, Kenya. So it's this really amazing community of entrepreneurs who want to use business as a force for good. So it's really an amazing global community. I'm not sure if any of you saw this. This is actually maybe, September, October, November last fall, but the Business Roundtable, came out and said, we want our folks to consider more than just profits when making decisions. So this is, CEOs of Amazon and Chase, et cetera. B Lab, the nonprofit behind the movement, took out a full-page ad that said, well, that's great that you talk about, wanting to do more, but let's actually put that into the DNA of your business. So some of these companies, Allbirds, Amalgamated Bank, Beauty Counter, Ben & Jerry's, signed this letter. It's basically urging CEOs of any company to say, let's back it up. Like this certification and this legal tool can really help you do more than just say you want to be a better business for the planet. And then the last thing is folks have just found that attracting and retaining talent has been super powerful for them. So everyone wants to attract and retain millennials, you know, who are the best people, and B Corp has really proven to attract and retain folks. So one other quick piece that I wanted to speak to is B Corp is not just about the certification standards. They also have innovated on a legal structure. So one of the challenges for many CEOs and business folks is that it's great to be able to say you want to do good, but if you have a board, or if you have investors, or if you have shareholders who are constantly pressuring you to make money, make as much money as possible, it's going to be hard to actually, you know, stay aligned with your mission. So B Lab created a legal structure in addition to this B Corp certification standard called the Benefit Corporation, which is passed in 39 states in the US and in Italy and Colombia, and the UK is working on it in some other European countries. But what it does is it allows you as an entrepreneur or a founder to take on investment capital and still be able to tell investors who traditionally have a right to maximize shareholder value. So the problem is that usually you take on investors and they say, hey, let's make as much money as possible. I want you to sell your company. I want you to have an exit. And the way that US law is set up, that most countries' law is set up, is you don't have an ability to push back on those investors and say, no, I want to consider workers, community, and the environment. And so what B Lab did is they created a legal tool called the Benefit Corporation, which basically gives entrepreneurs the legal protection to consider more than just profits when making decisions. So this is considered a game changer and really gets at that fundamental problem we have in our economy, which is shareholders take primacy above everyone else. And so B Lab is really looking at how do we institutionalize that piece and you know, protect companies. So this is sort of just, I just want to get to the, I'm sort of running up against my time here, but this is sort of visualizing the last 20 years have been about good products, and the next 20 years is really about good companies. So customers love that you have good products, but what about the entire company? What is the company that stands behind the product or service? This is the laws of the US. And then I'll get to these resources because this is how it can be relevant to you all. So one, like I said, I wrote a book called the B Corp Handbook. If any of you are interested, you can get it on, you know, wherever you get your books, Amazon. Try to get it at your local bookstore. Amazon can be, you know, not necessarily very next economy in their business practices, just putting that out there. And then the last tool, which I'll point to folks, is the B Impact Assessment. So this is where any of you don't have to necessarily be interested in certifying as a B Corp. You can just say, hey, I'm interested in what this might do. And so the B Impact Assessment is the free tool that any company can use to measure, compare, and improve their performance, and then compare your impact to different companies. So there's actually 50,000 companies, this number is a little out of date, who have taken this free tool and benchmarked their performance against the B Impact Assessment. And you can certify as a B Corp if you want, or you can just say, let's just see how we do and compare and improve your score. But maybe I'll pause there, check in with Mary, how I'm doing on time, or.
Yeah, no, I think, thank you, Ryan. That was a great introduction. That's not an easy thing to summarize such a big movement in 10 minutes, but you did it.
Great.
So Shaina is our next guest, and I'll let Shaina introduce herself, and then if you'll just share your screen, Shaina. It's at the bottom of your screen. Yep, there we go. Here we go. Perfect. If you want to go to a slideshow. Perfect. So once you see the model that they're using it at Quist, I think everybody will understand why they're on the call today. So I'll let Shaina introduce her product, and then we'll, as I said, we have a third guest that we'll talk to, and then I know everybody is going to be dying to jump in with questions. So take it away, please, Shaina. Are you maybe muted?
Still can't hear you, Shaina, unfortunately.
Yeah, we lost your volume. We had to. She was talking earlier, but she doesn't show a microphone connected. So Shaina, if you can hear us, maybe you could call in. I'll try to send you some info. And
can you hear me now?
Oh, yep, got it. Yep.
Okay.
There you are.
Okay. Okay. Sorry about that. So I'm Shaina Culberson. I am the president of Quist Valuation. And just to give you a little background, clearly having technical problems. There we go. Just as a little background, Quist Valuation is a 35-year-old business valuation firm. We have traditionally, over our 35 years of history, been in the business of what I would call high compliance type valuation work. This would be work for companies that need financial reporting valuation, high net worth individuals that need valuation performed for wealth transfer purposes, where our audience would be the SEC or the IRS. And over the 35 years history, we've performed thousands and thousands of valuations for companies across really a large spectrum of stage of company, anywhere from early stage startup companies, and we have a lot of them here in Boulder specifically and in Colorado, to 100-year-old multi-generational family-owned businesses. And so I mention that because oftentimes when you talk about valuation, the drivers of value based on the stage of business can be very different. Oftentimes when I work with an early stage company and I ask them about the breadth of their management team, they're like, I'm wearing 10 different hats. It's all on me. And they think that breadth of management or decision making in an organization really doesn't pertain to them. And we know that long term that's not true. While it may not be the #1 driver of value today for the business as an early stage business, these things are important for building a framework for how the business makes decisions long term. And these things, they take time to put them in place, and they need to be thought about. So the way that we think about value for companies is really with a long-term perspective. And as I mentioned, we were doing a lot of valuations for what I call high compliance purposes, but we probably all experienced over the last several years more of this kind of middle market businesses, these older generation businesses that are looking to exit. And we had a lot of clients asking us, how do I better prepare myself for an eventual exit? I may still have some years ahead of me, but I know that I need to get prepared for an exit. And we realized that our clients were asking us for not just a number for where they were valued today, but where they could really take the business over the next 3 to 5 years to maximize their business for the eventual exit. So we launched officially in 2018 a software platform called Quist Insight. And as I mentioned, there were 2 particular questions that we're trying to answer with this software solution or platform solution. One was, what should I do in my business to drive more value? But the harder question that we were being asked was, how much more dollar value would you quote unquote give me if I executed on different initiatives? And so we really to realize that our clients were asking us for kind of a priority list or an impact list. So if I documented my systems and processes, where does that fit in my priority list in terms of driving higher value for my organization versus maybe developing a mission and vision statement? Both are important, but they might have different impact on my business and the long-term value of that business. So that was really some of the questions that we sent out to try to solve. And then the other thing that we were seeing is that a lot of these businesses had never had a valuation before. They had no idea where to start or even how to think about value. And so the traditional methodology or the traditional approaches to value, there were a lot of barriers for business owners in general because it's time consuming. It can be a very evasive process when you start, wanting to open the kimono and look at all the financial information and corporate financial information. And it was cost and time prohibitive. So those are some of the challenges that we were trying to address with the solution as well. So what we came up with, Quist Insights, is really a framework for thinking about overall business value in 6 general categories. And some of this will probably sound very familiar to the framework that you are already thinking about in integrated reporting. And we know that value for a business is not just quantitative, it is also qualitative. Business owners love to focus in on the revenue driver and the profitability and the margin, but what are the underlying foundations of that business that's going to, going to support future growth and future profitability going forward? So what are the support structures within the business to enable that? So our platform is broken down into 6 categories. We ask 65 questions, and these are not rate yourself on a scale of 1 to 5, or is this a green or red issue for you? This is based on our 35 years of history, looking at thousands of companies to say, we know that most companies operate kind of in this general fairway, and best practices tend to look like this over here, and companies that need help tend to look like this over here. So it's more of a descriptor of what does your business look like as opposed to a self-grading system. So that strategic value is about your market position, brand, your perspective about innovation within your marketplace. Organizational value asks questions on processes and systems, culture, the communication mechanisms within the organization. Employee value is very much linked to that human capital, the experience of your employee base, your management team, but also how are they incentivized? Is their bonus structure, is their incentive structure aligned with the overall goals of the organization? That customer value, of course, we're asking about customer concentration, but we're also asking, do you have some sort of 360-degree feedback in terms of really understanding how satisfied your customers are? What do you have in place to ensure that? Financial value seems obvious. That's the financial metrics, but also we ask about the integrity of those financial statements. How do you set budgets? Is it a top-down approach, a bottom-up approach? Do you have outside review of those financials, et cetera? And then environmental, social, and governance hits on this emerging issues, clearly, that we were just talking about. And we focus a lot, our questions really are focused a lot on the governance part. Again, decision-making within the organization. Who do you see as your stakeholders? How do you communicate with them in a governance perspective? And then of course, we asked a few questions on social and environmental. So once the client answers these 65 questions in each of these categories, what we do is up here on this top left part, we return an overall business score, and then we show the client how that score is broken down into those 6 drivers. So they immediately get a visual. Okay, I can see I'm succeeding pretty well here in customer value and organizational value, but I maybe could consider whether ESG should be something that I'm thinking about. Is there something here within my employees and how I'm structuring my employees that might drive additional value long term? Each driver is then broken down even further. Right below here, we give recommendations based on how the client answered in each of those categories. We give recommendations about what they could do to increase their score, and we assign a point system to the recommendation. And ultimately, what we want to show the client is, today you're scoring a 675, but if you were to implement the suggestions in each of these 6 business drivers, you could drive your score higher, in this case of 700 something, and ultimately you can drive additional dollar value to your organization. So they show the client what that value gap is between what their current value of the organization is and what their potential value is based on these both qualitative factors and quantitative factors. And here below, we're just showing them what the range of value is, again, today and in the future. So this developing this platform, one, helped us show our clients that value generation is not just solely focused on financial value, that there are these intangible values within the organization that can be improved, de-risking the business and still driving additional value to their organization. So, and now our clients also have a way to prioritize some of these initiatives. I know that as a business owner myself, I love business development, I love strategy, I hate documentation. So what is going to incentivize me to maybe put some time aside and focus on the necessary documentation of systems and processes? So that's what we're trying to communicate with the platform. And I think that it's interesting to see kind of how parallel we think about these different buckets with the integrated reporting. We set out in 2012 to really change the way we delivered business from just delivering valuation number to really wanting to deliver insights to business owners so they could make better decisions within their business that would ultimately drive performance and valuation. But we don't really lead with valuation anymore. We really lead today with how can we help you make better decisions within your business for those eventual outcomes. That's all I have, Mary.
Great, China. That was a great introduction, and I think people are going to see the parallels we're seeing here with the different models. So before we jump into the discussion, I'll just let Stathis jump in. Stathis, do you want to share your screen? And Stathis is going to give us a little bit of perspective about. There's been a lot more focus on integrated reporting in the middle market and privately held businesses in the US side, especially in Europe. And so Stathis is going to give us a sense of that. Let's just see, Stathis, oh, it looks like you're muted, Stathis. I'm going to try.
There we go. I've unmuted myself. Does that work?
There you go. Yes, perfect.
Great. Okay, so I'm sharing my screen now, right? Is that what we're doing?
That's, yeah, please. You're just at the bottom of the screen. There's a green button.
Go.
Yep, got it. Perfect.
Okay, so that's great. Thank you, Sheena. That was really fascinating because I could redo your presentation and just change a few words and talk about integrated reporting rather than your excellent product that's focused on valuation and understanding intangibles. So what I'm going to say, I think, is very much similar to what you said, just from using a different tool or a different framework to think about the issue of things that are important in business but you can't capture in balance sheets or in financials. So basically, I'm Stathis Gould, and I work at the International Federation of Accountants, which is the global body for the accountancy profession. And the reason why I'm here basically is I think we're strategic partners with the International Integrated Reporting Council. We work very closely with them. We work closely to develop the IR framework, and we continue to work closely with them to use sort of really engage the global accountancy profession, and I'm talking about, you know, CFOs, accountants, controllers, auditors, in trying to enable integrated reporting. And the reason for that is quite simple. You know, the future relevance of the accountancy profession is really very much wrapped up in this wider view of business performance and business success. So you know, it just doesn't cut it anymore to talk about financial performance using financial metrics. And as Ryan referred to, you can't measure the value of most things with shareholder value metrics. So it's incumbent on us to really find a way of understanding and communicating value. So I've been involved in this around the same amount of time as Sheena, I suppose, when the IRC was formed in 2010, shortly after we embarked on developing the integrated reporting framework. That's, of course, based on the 6 capitals value creation model, with the business model at the center of that. Most of my focus really has always been on large companies, and it's mostly large companies that are doing integrated reporting. And I guess that kind of stands to reason, because you know, they have you know, reporting and transparency and is something that they do, and they have the resources to do it. And so you have, you know, probably a couple of thousand companies that are doing some form of integrated reporting, and more than that doing sustainability or ESG reporting. So then Mary and Paul came and said, oh, you know, what are the experiences of integrated reporting in this, you know, in SMEs or the small and medium-sized business market? And there's not a lot out there really, but I have identified a few examples that that we can talk about in a moment. But I think really we put out a report for our accountancy community on integrated reporting in SMEs, and you know, we really try to articulate why integrated reporting is relevant to SMEs, even if they're not, you know, even if reporting to external stakeholders isn't their main priority. There is a lot of value in this, of course, from an internal perspective. So really, at the core, you know, for SMEs and indeed for any sort of company, I suppose, there's just so many things that matter in an organization that one invests in to grow the business, whether it's people, whether it's brands, R&D, innovation, whatever it might be. investments in social, societal impact and in the community. None of these things, or very few of them, are reflected in the financial statements or the balance sheet. So, it's really then finding a way of really understanding these key value drivers internally, and then if one needs to, communicating them externally, and I think really that's the crux of it. I mean, there's two reasons why companies say that they embark on this journey. One is really to really bring the organization together in terms of one sort of a common understanding of what's really making a difference, and then in terms of effective communication to the outside world. And when you talk to SMEs, or the few SMEs or smaller businesses that are doing some integrated reporting, or really the integrated thinking piece that really interests them here, it is mainly about attracting funding and financing, getting the confidence of lenders and investors, and that makes a lot of sense, because it's through talking about your business through a holistic business model kind of perspective, looking at all of the types of resources that you rely on, invest in, and then have an impact on, to create value for yourself as an organization, for your shareholders, and then for other stakeholders. That has to be captured in some way, and that's what the integrated framework is really about, is capturing that. So that's kind of the number one reason that one comes across. But then you often find companies talking about the strategic value of understanding these areas more sort of closely, and then using it as a way of framing their strategic discussions and their investment decisions, etc. And so that brings a lot more confidence within the organization as well, and also can, I think, lead to enhanced trust with employees and suppliers, etc. So I think the core question for any business, and I'm glad that more businesses are starting to think this way, is it's not enough now thinking about how do we make money through our business model and our value chain. It's how do we make money in a responsible way, and then what is our net positive contribution, rather than how do we just be less bad. So again, as Sheena set out, I think this is just another kind of framework for thinking about those intangible strategic assets that are difficult to replicate, those ESG factors that are indicators of responsible business conduct and corporate responsibility, and bringing those together, I think, in a way that also then links back to financial performance and financial capital. That's often the missing link, is how then does that all link back to your fiscal sustainability. So with that, let's go to the next slide, which I won't spend much time on, but we've actually been doing a little bit of integrated thinking in our organization, and the reason for that is that IFAC is an incredibly complicated organization, not because we're big. We're fairly small. We only have about 60-70 employees, and a small budget, $30 million that comes from our members and the accounting firms, but we have a lot of different stakeholders to satisfy. We have a lot of different advisory groups. We have a standard setting function. We have a research and thought leadership and advocacy function, and we do quite a lot of different things. So we've been working on actually capturing how we create value through our business model. And I'm not really going to go through this now, but one of the things that I think adds a lot of value to a lot of organizations is that process of visualizing and bringing together all of the key components of one's business model. So if we just think about mid-market, small companies that have been doing some sort of integrated thinking and reporting, it's slim pickings. I mean, there are more than this. These are three of my favorite. I couldn't probably identify more than 7 or 8. but we did run a webinar on the back of the report I mentioned earlier that involved Delas and Stafer, two Italian companies actually that do very interesting integrated reports. Stafer being a sort of electrical rolling blind company with only 55 employees and 10 million euro revenue. Delas being 134 employees with an 18 million euro turnover, and they make diamond tools. And it's interesting, I think, for both of them, the journey, and I think, Mary, you suggested we should have a look at their websites. That could be a good idea, but I think the big part of their journey was really on trying to get confidence in their business, gaining the capital needed to invest in R&D, to provide a platform for becoming international, and again, focusing on what are their key intangible assets, and then how do they invest in those, and how do they create value related to their key stakeholders and their the kind of outcomes that their stakeholders want to see, and then talking about the balance and trade-offs that they have to make. So I think for a lot of these mid-market businesses that have investors or bank funding of some substance, they've got fairly well developed management processes already, whether they're using a balanced scorecard, process control system, KPIs, HR system, costing system. So they've got those underlying management processes to draw upon, I think, when they're starting out on this journey, which I think is really quite important. So, and then Anglo African is a privately owned technology company in Mauritius, of all places, beautiful island. They've got 60 IT professionals, and they really just wanted to innovate in reporting, improve their strategic process, and really, again, I think, using this as a basis to have external confidence in their business as they enter new markets. This really made a lot of sense to them. So, so with that, I think maybe perhaps, in fact, maybe I've even got the Delas. If I just
Stathis, I'm going to break in because we've used up a lot of the time, and what I'm going to suggest is maybe I can. Well, I definitely will provide all of these links and the slides to everybody so that they can do some follow-up and poke around the sites themselves. Would that make sense?
Yeah, absolutely. I quite like the Delas one. I would spend a bit of time on that. I mean, I think they've done a pretty good job, actually, of really talking about their business. Yeah, but happy to talk more in the discussion.
Yeah, thank you. That was a great overview and some perspective on the market, and I think, and all the efforts that you and your organization have done over the years. If I could sum up the three presentations, I think Ryan talked about that shift from good products to good companies. China was talking about good companies to good value and less risk. And then I think, Stathis, you did a good job of explaining that good companies attract capital, they attract the right kind of employees, the right kind of customers, and of course, they're doing the right thing. So I know there are going to be some people on the call who want to ask questions. If you're on your computer and you're muted, you go to the lower left-hand corner, put your cursor down there, and you can unmute yourself. If you're on the phone, you just hit *6. So *6 on the phone to unmute yourself. Anybody want to jump in? I see somebody on the phone. Hello?
Okay, can I put up a question?
Yes.
Yeah, my name is Kotora, and I am dealing with intangibles for about 10 years, some more. And I create a community in intangible assets accounting on LinkedIn. with some results. Now, in my experience, I am entrepreneurial. For 40 years, I create companies. It was in UK, in United States, in Ireland, France, Romania, working, creating SAP Romania, or SAP Ireland. And so I have some experience. Now, a question is how you look to the people when you say human capital. Just to point that people are not asset. They are their own asset, and they have their own resources. No company in the world is ownership on the human resources. They have a contract, which is a work contract, which is like every kind of contract, can be a supplier or customer. It's a contract. Of course, better you do contracts, better you can assure the value creation, but not like an asset. You are not the owner of anything regarding humans. So it's very confusing, and we say, okay, it's a company, human capital, and mostly for the small and medium-sized companies that I create during very many years. And I know very well that even the biggest talents, even if you pay them very well, they don't hesitate 1 second to leave to another, to your competition, and even with your business models. So saying that
yeah,
it's a
yeah.
capital cannot be really, it's just playing with the words.
No, so I'll just jump in really fast, Kotora, and that in general, what this movement is saying, and I think it's clear from these 3 speakers, is that you don't own all of your capital. You have to attract some of it.
But financially speaking, you own your capital. So it's playing with the word.
Well, but that's not.
If you look to what the colleague said.
Yeah, sorry, that's not the sense that people are using the word capital. They're using it as a productive asset, and a productive asset, yes, that you either own, yes, or attract. So I'd rather. Do, yes, you have a question for our, or could we move on to a question for someone else? I'd love to engage in this conversation with you, but I don't want to take up time. We've got some great speakers here.
No, I just want to mention that you use a lot of terminology, and you have even an accountant in your on your board, and it's very confusing because we are missing everything. So this is all. It's just I agree with you that we can take the literary, the poetical side of the terminology, and in this case, of course, everything is nice. But if we go approach of FASB or IAS, we are really in a completely confusion.
Okay, that's helpful. Okay. Thank you. I'll point to folks on the chat. Ken Wilcox and Ryan Henneman are having a conversation about B Corps, and if there's an impact on price and market value. I think that's what's so interesting about what China's work is doing. This link between, as I said, the definition of a good company and good value. So Ryan in China, if you want to chime in on that, I think that'd be interesting.
China, you want to go? Go ahead. I think you may still be muted. I'm not sure. There you go.
Thank you. I would say that our experience, when we see our clients or we work with companies that are looking to transition their business, the biggest risk for small to medium enterprise businesses is the sustainability of ongoing customer relationships, as well as systems and processes. So it's very, very common for this knowledge to be centered in a few people. And so that's why we really talk about, if you could have a $50 million revenue business, but if the system and the processing and whoever owns those relationships walks out the door after you sell the business, you haven't created any value. So that's the difference between price and value, the way that we see it. And we think that if companies focus more on driving additive value through these intangible aspects of their business, ultimately they will get a higher price at the time of exit. Now, not every business is going to be able to sell to private equity, and not every business is going to be able to, sell into that type of market. So we really are trying to think about really that small to medium-sized enterprise where those options aren't necessarily available to them, maybe because of size and geographic restriction. And so in helping them think about the difference between value and price.
Brian?
Yeah, and I would just add, some great follow-up questions around, like, if Unilever is considering move to B Corp, there must be some degree of confidence that market value will not be diminished, and in fact, maybe improved. I think that the question of whether these sustainability or ESG or even B Corp efforts are more costly or at least neutral, I think is shifting into, hey, this is probably actually beneficial to our business. And in fact, if we're going to even address climate change or other, income inequality, we better just go there anyway, because otherwise, our country might get ripped apart. So I think that the sort of debate is definitely shifting into we need to do this, and so what are the different tools? And that's maybe where China and some other conversations are we need to move towards a more social and environmentally responsible and mission-driven business movement, and then what are the tools to get there? And I think B Corp and what China's are great tools to help do that.
Great.
Right, and maybe because of where we sit in Colorado, and I'm sure you see it in California, is having that mission-driven organization does help with culture, and to the previous discussion, does help with the human capital piece of it in terms of retention of employees and why employees want to work for certain organizations over others. It's a really difficult job market for companies, and by appealing to a bigger picture, a bigger mission than just revenue generation or profit generation, it helps them with that culture piece and attracting talent.
I have a question.
Go ahead.
About disclosure, and what kind of evolving disclosure are you seeing among small and medium enterprises, and particularly frameworks, whether it's the Global Reporting Initiative or TCFD or the Sustainable Development Goals? It's a big lift for large companies, and certainly a big lift for small and medium-sized companies. So I'm just curious, in your individual experiences as companies do this work toward B Lab certification or assessment or to integrated reporting, what you're seeing in terms of the framework linkage.
Any of you want to jump in on that one? I think staff has certainly had a good point about how people, I've certainly seen it, my career started in banking and then as a consultant helping companies communicate with banks. The kind of packages people are giving are much more robust than they used to be, but I'd love to hear if anybody else has any comments on that.
I don't
Okay.
I
think,
think that the silence may have to do with the fact that there isn't as much happening as
yes,
those of us who work in this arena might expect or
yes,
like.
I think that's
I guess
right.
maybe it's part of the conversation is how do we help that to shift and support companies that would benefit from the disclosure as well as the internal work to make disclosure possible.
I mean, I have to say that I think the B Corp movement has done a better job of that than anyone else. Brian, I mean, do you see people using that with other types of stakeholders as well, or?
I guess I was typing to Wilcox at the same time as trying to hear the
Oh,
question.
okay.
So the question is like maybe just a reframe of the essence of the question would be really helpful.
Sure, I'm wondering about disclosure, and as companies do the hard work toward certification,
Yes.
and I'm actually on a board of a B certified company as well, and as they think about disclosure, it's a challenging component, and with all the different frameworks that are accessible that address environmental, social, and governance issues, I'm just curious what you all think about what will be used as models for that disclosure and what companies are struggling with as they get to that place.
So I can share my screen really quickly. The way that B Corp does it, and you may already know this if you're on the board of a B company, this is our company, Lift Economy. So every certified B Corp is publicly listed on the B Corp website, their score. And anyone can access this publicly. 80 points is needed to certify. It goes up to 200 points. You can click into different B Corps, like, worker section and see how they do on like financial security, career development, engagement, worker ownership, community. And then you can, see how they scored previously. So, you could replicate this similarly for Patagonia or any sort of certified B Corp. So that's one way. Yes, the B Corp process also rewards companies for like having annual impact reports that disclose, that integrates financial metrics with impact metrics. So there's like some incentives, which contributes to this score going higher or not. And so that's one way that companies, at least in the B Corp community, are doing disclosure.
And I would just ask Shina real quickly, are you aware of people using, I mean, your tool is designed primarily for management and ownership to understand the drivers and make changes internally. Do people ever use that information externally, and if so, how has that happened?
That is one of our goals. I mean, in an ideal situation, our goal is to work with clients who have interfaced with the platform for a number of years and then be able to show a trend line. When we started off, here was our score, here's how we scored relatively in each category, and as we've moved towards a transition, we've improved in each area and to help them demonstrate that trend line, that score trend line, as well as the value trend line. So it's ultimately our goal with the platform. I've had a lot of conversations and interactions with different fund managers, venture capital and private equity, to try to get their input as to how could they use a platform like ours to track and as a measurement to track their portfolio companies. So we're in conversation with that. It's not easy. It's not, not everybody embraces this sort of integrated reporting and having a kind of a common way of looking at their investments. But it's definitely a conversation that we're actively involved in trying to push the conversation forward. But it's challenging.
Yep. Okay. Anybody else? We're just about out of time. I hate to. This time went by very quickly, but this was, I guess we'll cut it off, but hope to continue the conversation in the future. I'll let each of our guests maybe have just a last 60 seconds of comments, and then we'll call it a success for the day. Shaina, why don't you go first?
Well, you know, I just appreciate the opportunity. I think that we have realized for a very long time that value creation is more than just quantitative, that there are a lot of intangible and qualitative aspects to a business. And we're very much aligned with what integrated reporting is trying to accomplish long-term in terms of long-term value creation.
Great, thanks. Stathis? Who may be muted?
I'm muted, yeah. Can you hear me now?
There we go. Yep.
Yeah, thanks for the opportunity, Mary. I think it's just incumbent on us all to sort of just think about how we can, you know, support, you know, SMEs in enhancing how they run their businesses, but on the disclosure side. So, you know, a part of that is really reaching out to the right partners, you know. So there's a number of people on this call, but there's SME associations. I know Paul Thompson, for example, in Europe is connected to a lot of SME associations, but it's really thinking about how we can raise awareness and you know, bring that sort of knowledge to that fragmented constituency. Is really difficult.
Yep. Well, I do feel like we're all just beginning, but this has been a great first conversation. We'll let Ryan talk, and Ryan, don't forget to send me your slides.
Yes.
I'll share these with everybody. I'll share links. I'll share, you know, as much as I can, including the video with everyone. But Ryan, last words?
Yeah, I just say appreciate the space. I think this is like what's needed is just the community aspect to see what we're all working on. So just want to show gratitude for you all showing up, and yeah.
Well, great, thank you. I really was excited when we first started planning this program, because I think there's a lot of